The Aussie versus US dollar traded to the lowest level going back to 2020 and trading this week, but then started to rebound to the upside. And like the other currency pairs, after reaching a peak on Wednesday, started its rotation back to the downside and closing near mid-range. I'll talk about all the technicals that are driving this currency pair, so let's get started. Let's start by looking at the weekly chart. Why the weekly chart? Because the low prices that we reached last week and this week took out the low prices from 2022 and traded at the lowest level going back to 2020. So you have to, it wouldn't fit on the daily chart, so I have to go all the way weekly chart to be able to see that. Now, the other thing I want to bring to your attention is this swing area between 0.6169 and 0.62097. More so the lower level of that chart. This level was defined by the recent swing lows and swing highs, and so that level again 0.6169. Now, when we look toward what we may look forward to next week, we got to go all the way back to the hourly chart to see what the price action did this week. And remember that 69 level that I was talking about off the weekly chart? Well, here I have a horizontal line coming in at the 65 level that drew off of this hourly chart, and this swing area was defined by a number of different swing lows here, and then swing highs through here before we rotated to the upside. And note here the 65 level was a low, and trading here today, the price came down toward that 65 level as well. That was just 4 pips below that 69 level off of the weekly chart. So there is something going on around that 65, 69 type area that is going to be important going in next week's trading. If we were to break below that level, then look for further momentum to the downside, similar to what we saw through here. But I would look for continuation through the low from last week, trading to the lowest, new lows going back to 2020. So that's one thing. The other thing that I want you to pay attention to is the 100 and 200 hour moving averages. Now, admittedly, like some of the other currency pairs, the market didn't really pay attention to these moving averages much during the week. We traded above and below it, traded above and below it, traded above and below it, traded above and below it. Trading here today, we're trading above and below it. So we've had this bias switch to the upside, moving to the bias switch to the downside, and that's not good for traders. But we are currently trading right around those moving averages, so it will be a key barometer, or it will be a barometer for going into trading next week. If we trade below it, it's more bearish. We look toward that 65 to 69 level, and then below that level. If we trade above it, then that's more bullish, and we start to look toward higher levels up here, including this high and this high. This was a Wednesday high and the Thursday high, a double top right there that happened to correspond with this high going back here. It was sort of random, but with 3 separate highs near that 0.62457 level, it's now increased in its importance because of those levels. So get above those levels, and we start to look toward the 38.2% retracement after testing or getting above these swing levels. But the 38.2% retracement is going to be a key target on the top side. That's off the move down from the November high to the January low. As most people know, I like to get above the 38.2% retracement level to show that the buyers are meaning business in what has been a more of a bearish market for this currency pair. So that is going to be a key level on the top side. So here we sit at the 100, 200 hour moving average, not knowing which way we want to go. I think the market wants to wait until next week to figure that out, and we'll look for the momentum in the direction of the break away from that level, and we'll start to look toward other levels, including the 65, 69 level on the downside, including the 0.6245 level on the top side. So that's my take at the Aussie versus US dollar. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.